Hey, I'm Jason Strongerhead. Welcome to another episode where we're going to talk about the US-China trade war and its impact on the stock market. So is it going to be another catalyst that's going to cause the whole stock market to crash again? So if you're interested, stay tuned. In the next few minutes, I'm going to talk about just that. Now, why is it that you feel the US, right, is always picking on China? Really, it's one of the key reasons is because of the US trade deficit. Now, take a look at the US trade deficit, yeah? Okay, so for US, their total okay, that means US buying from other country, right? It's $3.1 trillion. And take a look at the total export. So the total export is $2.5 trillion, okay? Just talking about last year. And that's a deficit of about 600 billion, right? So when import is more than export, there will be a deficit. So export more than import, there will be a surplus, right? So of course you want surplus, you don't want deficit. Okay, but let's take a look at the deficit and study further. The total import from China, that means US buying from China, is $539 billion. So the total import, right, from China, 17.3% of all the import are from China. And if you look at US selling to China, right, it's only $120 billion, which accounts for only 4.8% of the total export in China. So if you look at it that way, right, that means US is helping China to be strong. They're giving them a lot of money. They're helping them make a lot of money, right? Okay, of course, US will feel imbalanced, right? Correct or not? Because they are helping China a lot, but China is not helping them back a lot. So therefore, you can see that they raised the trade, they raised the tariff, and they wanted China to promise that they will buy more import from US, right? So to balance the whole thing up. Because if you look at it, right, China accounts for 67% of the total US trade deficit. So if they were able to cut that, they feel that China will be painful. So that's the reason why they want the tariff in. That's right, there's a lot of trade war happening. Okay? They want to balance back power and they want to find a way to make sure that US also benefit. Yeah. However, is it going to be easy? Okay, of course, it's not going to be easy. So let's take a look. Is who need who more, and therefore who will need to give in, correct? But in this situation, it's very hard to say who needs who more. No? So look at China. Okay, China, they are very good with manufacturing. In fact, they are able to lower the cost of manufacturing so much that a lot of people, not just US, a lot of other countries, right, depend on China for their manufacturing to lower the cost. Okay, so and they have done a lot. The China has done a lot in order to make sure they are able to have that competitive advantage and offer this edge, right, to a lot of people doing business to keep their costs low. Okay, so you can look at US, right? They are dependent on China for over 70% of all the pharmaceutical ingredients. Okay, so they're so dependent on that. And you can see that 99% of all the shoes overseas, 70% all come from China, okay? And 72% of all the smartphones are also from China. Not only that, the sweetener, the toys, the furniture, the sport equipment, almost a lot of things that you're saying, they are all dependent on China, okay? And China supply about 90% of all US antibiotics. Okay, so on and so forth. So you can see that they are really over dependent on China. And China is going to have a massive big plan that they have this China 2025 plan where it will include expansion in terms of blockchain technology, artificial intelligence, robotics, semiconductor, blue chip making technology, okay, and biotech. All these are the future of where the industry probably will be. So if China continue to expand in this area, and they are probably just going to get stronger and stronger and stronger, and a lot of people are just going to be overly dependent on them, right? So because of that, is it easy to just pull out and don't want China? Okay, I don't think it's easy, Okay, so some people say they can just pull out, Now, if like the US already, Japan already done that. So Japan offered like $2 billion to help the manufacturer to go back to open the manufacturing plant in their own country, right? So is it really that simple? Not true, If US can say that, oh, okay, let's be less dependent on China, and then they can all open their plants, right, into their own country or open in their plants in other countries so that they are not going to be dependent on China so much. It's not just that. It's not so easy. See, okay? So if you really want to just bring back the plant into US or go into another country, you need infrastructure, no? Okay, so the infrastructure, for example, for housing, for transportation, for airport, for communication, all the infrastructure. So, for example, in order for this example, right, Taiwanese electronical giant, okay, they want to move most of the iPhone last year. They want to move, it was unsuccessful. Why? Because the cost of moving, in order for it to move, it's not just build a factory there. There's a lot of other infrastructure, and they will cost you about $8 to $10 billion just to do that. Now, can you see, right? Japan offering 2 billion for people to move in. A lot of people won't move. Why? Because it's not easy. It's not easy to just move and move like that. Okay, it will take a lot of money, and China has the infrastructure. Okay, for people to just move to China and do the manufacturing and produce goods very, very cheap, whereby it's not easily replicated in other countries. So because of that, right, it's not say that they want to move, they can just move. Okay, and China affect US economy in big time. So China is one of the largest foreign holder of US Treasury. China buys a lot of US debt to support the value of the dollar, and China's role as America's biggest banker give its leverage. So some people say, but what if US, right, decided to be very difficult? Then what can China do? Yeah, China can sell the debt, right, that 1.3 trillion dollar debt. Okay, and then after that, what will happen? Wow, it's going to be bad. So in 2008, remember the big solvency crisis correct? Okay, so the debt, the bubble debt. So if let's say this is going to happen, the US market is going to crash many times worse than the 2008. However, like that, that means China will benefit. Not really, Okay, so you must also remember, US is a very big play a very big part, right, in China's import. So if let's say US crash, then China not going to benefit as well. So everyone needs everyone. So who is going to win at the end of the day? Yeah, it will depend on who has cash, and that's why you can see China is doing a lot of things, right, to be less reliant on US, and US also doing a lot of things to be less reliant on China. So because of that, right, eventually I believe they will find out a way to balance, and probably the whole stock market will still be okay. Yeah, will still be okay. That's my take lah. Of course, in the short term, there may be some knee-jerk reaction here and there, but overall, I think it will still be okay because somehow they will still manage to figure things out. Yeah. So that will be just my take. Of course, I don't know what is really gonna happen. We have to just wait and see. But what are your views? You can feel free to share me your views. And also, some people has been asking me, right, why am I not buying oil and airline stocks? So is there any reason why? If you're interested, let me know. I may make a video on that for my next episode. So hopefully you have enjoyed what I've mentioned and shared. So I'm Jason Strongerhead signing off. Thank you and see you again. Bye bye. Trade safe.